Dear everyone, welcome back to the conference, to our next part of the program on how we fill the investment gap for green innovation. When we were developing the program for this conference in the beginning of this year, together with the co-organizers, it was an obvious choice for us to put financing for a green innovation on the program. With the unexpected turn in the geopolitical situation in February and the spike in energy prices, green innovation has become even more relevant. Therefore, I'm very pleased that we will start the panel by listening to the introductory remarks by Laura Kotzi. Laura has been the Chief Energy Modeler at the International Energy Agency since 2018. In this role, she oversees the agency's work on outlooks and forecasts and is in charge of overall consistency of modeling work and resulting messages. Ms. Kotzi is also head of the Demand Outlook Division, with responsibility of producing the annual World Energy Outlook, the Energy Agency's flagship publication. Today, she will share with us her insight on investments and innovations needed to reach net zero by 2050. Dear Laura, the floor is yours.
Irene, thank you so much for this kind introduction. It's a great pleasure to be with all of you today. So as Irene mentioned, what I'd like to do in the next 10 minutes is the following. First of all, describe a bit where we are today, just 8 months, 7 months after Glasgow, but really in a very different world for what concerns energy. What do we need to get to net zero, and then focusing on the investment part. So let us start with looking what has happened to CO2 emissions. You know that during the COVID crisis, we had a very big contraction in CO2 emissions due to the pandemic. And what we measure now is that in 2021, actually, we saw the largest increase ever in emissions that we have ever done as humans. The reason being mostly because coal use has rebounded very, very strongly. And this despite the fact that we are seeing renewables breaking records year after year. We're seeing ourselves in a situation that energy-related CO2 emissions are at the highest level ever. And this was pre-Russia's invasion of Ukraine. Now in June 2022, we found ourselves, as Irene already mentioned, we see very high oil prices, very high gas prices, very high coal prices. So at the International Energy Agency, we are really seeing this as the first global energy crisis. We have lived the energy crisis before in the 70s, some of you may remember, but that was in a way only an oil crisis. Today we are really facing a crisis on all fossil fuels. So what lessons did we learn back in the previous crisis? Something important actually happened back then. We moved very fast on innovation, and in particular, I give you two quick examples. Back in the 70s, in the span of 5 years, we went to selling cars that were using 20 liters per 100 kilometers to cars that were consuming half of that in the span of 5 years. In the same decade, we actually started innovating and installing a lot of nuclear. Most of it actually is still running today. So these very high prices, if we look back at history, they were actually a big, big trigger for innovation. Now, will this happen this time as well? This is what we are really monitoring very closely. So if you look at what is needed in terms of changing our energy system to be on track on transition, this is based on our net zero by 2050 report. We see two things need to happen in this decade. One is about deployment. So we need to deploy on 3 different axes. One on renewables in the electricity sector and decarbonizing the electricity sector with all our means, with renewables being the backbone. We need to have 4 times what we had in 2020. So we just released last week, how did it do in terms of renewables in 2021 and our expectation for 2022. And we are seeing close to 300 gigawatts for last year, a bit more for this year. If you look at the growth rates, I have to say, if you were able to maintain those growth rates through 2030, this target for net zero is within reach. But we need to maintain the average growth rate we have seen over the past 2 years. Similar, in a way, good story is about electric vehicles. We need to electrify the economy. The data for 2021 shows that we reached globally 10% of sales of electric vehicles in overall cars. Again, if you look at the growth rate we are expecting also for this year, we would be on track to reaching this 50% of sales by 2050, by 2030. Are we doing well in all areas? Not at all. If I look, for example, at electrification of heat, we are very much lagging behind. So a big push would be needed there. And another area where we are not really moving fast enough to be on track is efficiency in general, especially in Europe. I would say buildings efficiency is lagging behind, but in general, energy efficiency is not moving at the pace we would need. This is not an innovation challenge. This is a deployment and investment challenge. We also have an innovation challenge this decade. And why do we need an innovation challenge? For this reason. So if you look at how much emissions we would be able to save to 2050 in a net zero scenario, half of it is coming from technologies in the market, the one we just mentioned. It's solar, it's wind, it's about electric vehicles. But we have nearly another 50% that is coming from technologies that are not in the market yet. What are those? We heard just from the speakers before, carbon capture and storage for cement, very much needed, but not yet there in terms of costs. Hydrogen and hydrogen-based fuels. This is an area where, when we are looking at innovation and what we think may be triggered by these high oil prices, is certainly an area we're watching at very, very closely. Hydrogen. The other area, batteries. Batteries are going to become ubiquitous in all energy systems, in all parts of the energy systems, from small batteries that we may use in what we call the trottinette, small scooters, to big batteries that would balance electricity systems. So this is an area which for us is critical, and where we need to see a lot of innovation happening this decade. And finally, I would say that anything that is related to negative emissions, so carbon capture and storage, bioenergy with it, and direct air capture is another area where we would see a big innovation need. You see that there is not only those three, there is many more also in the field of nuclear with small modular reactors. So what we see is that at the same time of deployment, we need to push to advance in all those areas. And you see in the banner there that we're working with the governments to make sure that we actually would move to a pledge on clean energy research and development to reach close to 100 billion in demonstrations by 2030 in a host of technologies. We're quite far from that. We are less than a third, and certainly private-public cooperation, international cooperation, CO2 pricing are all needed to get there. So we are seeing a big mismatch today in the energy sector. We are investing in oil and gas as if we were compatible in a trajectory that is compatible with net zero on demand. But the truth is that we are falling short tremendously on providing investment in clean. We are not investing enough in clean grids. We are not investing enough in the demand side of the story. While in oil and gas, on the supply side, we are investing according to those levels. So this mismatch is creating and adding on volatility and disorderly, putting pressure on disorderly transitions. Starting with the positive side of the story, we are also monitoring what countries are actually putting on the table after COVID. So a lot of countries putting recovery spending on the table. The good news is that this is what we're tracking up to basically end of last month. For the first time, we are seeing governments in advanced economies that have earmarked money to the end of next year. So government portion of money by the end of next year, end of 2023, which is actually in line with what would be needed in the very short term to align with a net zero trajectory. This is great news. Where do we need to work more? Very clearly with emerging markets. We have heard the colleagues from the Asian Development Banks earlier. There is a big gap there. This is very much understandable. Those governments have been facing a number of multiple crises at the same time, very, very minimal fiscal leeway there. We need to work internationally to really support those countries to step up in the short, medium, and longer term. So a bit of two different stories in the short term, with most governments in advanced economies really having stepped up. Now, this is only one part of the equation. So government money is one part of the equation. There's a huge part of the equation that needs to come from the private sector. So if we look at where the money needs to come from in terms of technologies and sources of financing, here you see what we are investing now is around 1 trillion. If we were to be fully compatible with the net zero scenario, we would need to go to around 4 trillion. So you see clean electricity very, very central, but also efficiency and uses. We have heard cement, steel, transport. And when you look at the sources of capital, you really need to blend, but the role for private sector is really huge. So we need to work very clearly. Some governments are doing tremendously good steps in the right direction, but without private capital, this challenge is simply impossible. And I would stop here and thank you very much for this great opportunity to introduce this session. Thank you, Irene.
Thank you so much, dear Laura, for setting out so clearly that investments and innovations are needed to reach net zero by 2050. I think you mentioned 4 trillion, right?
Yep.
I think you could not make a better case for the need for innovation. And also what you mentioned at the start with that we are at the peak of CO2 emissions at the moment. That means that we're just not on the right track. So I'm very pleased with your introductory remarks, and I think with this, you've set the scene very nicely to our next panel, because with the next panelist, I'm happy to discuss on, okay, but how could it work? And I think we have a great example there. We have a great line of speakers. So we have Alex Hartman, Chief Financial Officer from Nordvolt. We have Laura Pio-Vezan from she's Deputy Director General from the European Investment Bank, and Julia Renaud, Senior Director of Europe from Breakthrough Energy. I'm really pleased that you're here. Please know, if time allows, we'll have the opportunity for a Q&A at the end, so for the attendees. But first, I want to start with a bit of an introductory round, because I don't know if the crowd is who's listening in today is very familiar with the background of every panelist we have here. And then I want to start with you, Laura. How is the European Investment Bank supporting green innovation, and where do you focus on?
Thank you very much, Irene, and indeed, very good introduction and setting the scene from Laura, because what she really put very much emphasis in is on the need for investments in developing the solutions that don't yet exist, or that needs, in fact, to be scaled up and deployed at scale. And this big need of investment is about, indeed, scaling up and in a number of areas. The areas where we do see indeed more need to invest is first of all, that net zero requires a significant amount of decarbonized electricity, and this demand comes both from traditional use, but also overuses like the electrification of some industries, the use for hydrogen production, and there is a big role for innovation here. Things that we have supported are, for example, the floating offshore wind, solar. The second area is the energy storage. Energy storage innovation could be a game changer on the path to net zero. And the development and production of batteries are, as Laura mentioned, and I'm sure Alex will talk about it later as well, are essential for the clean energy transition, but also, of course, for the clean transport transition. Third area, green industrial innovation, in particularly disruptive innovation in the sectors which are hard to abate: steel, cement, chemicals, and plastics. And finally, technologies that allow us to throw carbon dioxide back from the atmosphere. We need to invest there, maybe even more at fundamental level or basic research, so that we can have then a path forward for solutions that are not yet available, even at a demonstration stage. So we did see a very important role for the European Investment Bank in supporting this scale-up of the green investments, both in terms of existing technologies and on the new technologies. And to do so, we have indeed enshrined our commitments in our strategy. So as a EU climate bank, our commitment is, first of all, to increase the share of our lending towards projects contributing to climate action and environmental sustainability to 50% by 2025 and beyond. And this increase is aimed at increasing the overall investments in green projects. So we have a second target, which is to support 1 trillion euro of green investments over the critical decade to 2030. And third is, of course, not only we want to support green investment, we want overall that all the remaining investments that we support are Paris aligned, so do not undermine the goals of the Paris Agreement. And this is the third key element in the decision. And in this commitment, which was taken by the bank in 2020, we have the full support of our shareholder. Now, these are commitments. Of course, the question is, as you say, how do we support? So how do we translate these commitments in really guidance in selecting the investments? So we do ourselves align a lot with the EU taxonomy. So on the basis of the EU taxonomy, we define what type of projects are green, are climate, and also we define what type of projects are Paris aligned. So what are the criteria needed in the different sectors to be Paris aligned? In addition to that, we also addressed in a number of areas this alignment through the economic assessment of the investment. And in this economic assessment, we base it on a price of carbon which is consistent with the temperature goals. So a price of carbon which ranges from 250 in 2030, going up to 800 in 2050. And this is consistent with the 1.5 degrees path. So, and the last point I wanted to make in terms of how we are indeed committing is that we are also looking at what the counterpart does and starting to engage with the counterparts to support their journey towards the transition.
Thank you, Laura. And I'm just curious, do people come up to you, or do you go out and select projects to invest in? How does that work?
So it's a bit of both, but we are demand driven. So people can come up to us with a proposal and we assess them as an investment bank, but keeping in mind our indeed also policy objective. But at the same time, of course, we work with partners. We are present on the market, so we work with the Commission a lot on looking at what they are financed at grant stage and where there is need for investment at the growth stage, the demonstration stage, where the grants do not arrive or not to the right extent to support the acceleration.
Thanks so much for setting out so clearly what the focus of the EIB is on, really on decarbonization, storage, and green industrial innovation. I think this is a nice bridge also to you, Julia, because I think it's also nice to hear from you. What is Breakthrough Energy and what is it trying to solve for?
Thank you so much, Irene, and thank you very much to the organizers for inviting me. So I'm indeed Julia Renaud. I'm Paris-based and I work at Breakthrough Energy in Europe. So maybe just a few words about Breakthrough Energy for those that are not familiar. So it was set up in 2015 at the Paris COP, at a time when Bill Gates and a coalition of private investors began to focus their collective resources to fight climate change. Today, Breakthrough Energy is a network of entities and initiatives, and it includes investment funds, not-profit and philanthropic programs, as well as policy efforts. And all of this is linked by the common commitment that we have to scale the technologies that we need to reach net zero by 2050, and of course, to make those technologies affordable to all. So we're very driven by what the climate science says and also the technology experts say around what is important to focus on in order to reach net zero. And each of our programs is helping to fill a funding gap that exists of a technology's deployment and development. So what Laura said here, we have our first program called Fellows, which is helping to solve for the funding gap that exists for early R&D. So essentially supporting researchers and helping them think about their commercialization and then their industrialization plans. Then we have a second program, which is a venture fund, which is solving for the funding gap that exists at the stage of company formation, particularly focusing on the technologies that, again, have 0.5 gigaton of CO2 at scale emission reductions potential. And here we have a partnership with the EIB. We have a joint pilot venture fund of 100 million euros that focuses on startups in Europe. And then our third program is called Catalyst, which is solving for the funding gap that exists for early stage, first commercial scale projects. And here we're focused on long duration energy storage, direct air capture, green hydrogen, and sustainable aviation fuels. And here again, I'm happy to speak to the partnership we have with the European Commission and the EIB. So essentially, we're broken down between these three stages: early stage research, then what is happening at the stage of the company formation, and then what are the challenges for these first commercial scale projects. Now, coming back to the question around sort of what are the innovation priorities, I mean, the IEA, Laura and Laura also explained that well. You know, we've made incredible progress on technologies like wind, solar, electric vehicles, but the next generation of technologies that we need to get us to net zero, like steel, cement, aviation fuels, and also mentioned by both speakers before, high quality carbon removal technologies is critical, and that also will be harder. And Bill Gates often refers to the main challenge, or one of the challenges being that of what we call the green premium. These technologies often don't have any differentiating factors other than the fact that they're more expensive. So if you take low carbon cement, it costs roughly twice the cost of cement that we have available today that is emitting. If you look at steel, you know, it's 20 to 40% higher than today's steel. And yet also comes an additional sort of higher cost with the first of a kind projects, which come also with a higher premium. And naturally, because of that premium comes the challenge of finding the buyers, so the off-takers. And because there's a potential lack of off-takers and commitments to buy these products, then it becomes also more expensive to finance these projects. So the banks provide higher loans, and if you will, of that chicken and egg situation. So today is really, you know, the importance of thinking about how do we address that big gap that exists for technologies today, you know, that are fossil emitting and that come often at a highly subsidized sort of rate, and thinking about how can we help address the deployment gap as well as the development gap that's important. And one last point, I think, Irene, that you mentioned quite clearly, and that was also mentioned by the previous speakers, is the importance today, not just looking at these technologies from a climate impact perspective, but also that the importance that they bring from an energy security perspective. Mm-hmm. And here I'll again call out what Laura and Laura mentioned, you know, on the importance of investing both in innovation and in deploying the technologies like long duration energy storage, grid improvements, and others that will enable the decarbonization of the electricity sector, as well as the decarbonization of the fossil fuels that we today use.
Thanks so much, Julia, and very well set out on the role of breakthrough energy really in the different phases of the whole innovative process. I like what you said also on the green premium, because I think it's still the case, like it's more expensive at the moment often. But do you also think that maybe that is the right price and the carbon is not priced rightly? I think this is one of the discussions we've been having on carbon tax, right? Because we don't, is carbon rightly priced at the moment? How would you see that?
Sorry, I think that the challenge is mostly that a lot of these technologies will come at a higher CO2 price. And so if you think about steel, you know, we're talking about 50 to 100 to 150 tons of CO2 price differential. I think there's a difference between, are you sort of under a scheme where you receive today free allocation versus some of the newcomers that we're seeing like H2 Green Steel that are coming onto the market and that don't have that area of, you know, that type of free allocation. So I think, you know, of course, there's decisions now around the phasing out of that free allocation, associated with that, the carbon border adjustment measure to make sure that European producers are not at a disadvantage from those that will import. But certainly, you know, thinking about a CO2 price, making sure that that's fully allocated and equally carbon contracts for differences, which we're also seeing, you know, that are important to help create those markets. If we think about, you know, the price that comes with consuming green hydrogen in the interim phase until, you know, it becomes cheaper. So there's certainly a lot of policy and CO2 discussions to be had, and I think we might cover that in this panel.
Yeah. Thanks so much. And I think this is a nice bridge and to Alex, and also really curious, first of all, to learn a bit more on Northvolt's innovation on this front. Alex, please.
Thank you, Irene, and thank you for being able to participate here today. So yes, a little bit about Northvolt. We are a startup, very capital-intensive startup. We started in 2016, and it's a homegrown European startup with the ambition to make the world's greenest batteries. So the CO2 content within the battery, when you deliver it already, being the lowest globally, and making green batteries. It's very capital intensive. Until to date, we've raised roughly 6 billion euros, and we would not be where we are today without policy-driven support and the collaboration with policy, with industry, and with different type of financial investors, and happy to talk more about that and the different challenges and possibilities that we see. Our customers are mainly the automotive right now, as well as energy storage. So moving energy storage, but also physical storage to kind of work on energy security, peak shifting, and the likes. The biggest portion is right now automotive. So the likes of Volkswagen, Volvo Cars, BMW, Scania, and we have roughly 50 billion euros of kind of order book and offtake agreements that have also been enabling us to get to where we are to date. But it's something that's quite unique that we have been able to accomplish with our partners. So it's really the automotive, it's the energy storage, and it's what we see in the demand coming over the next couple of years. If you kind of relate this to what Laura was talking about and the need of batteries within the energy transition, I think this is one of the industries that is kind of in the whole net zero curve is transitioning quite rapidly, and one of the first ones. By 2030, Laura says we need 6.6 terawatt hours of battery production globally, and it will be really tough to get even to that. Right now, if you look at other estimates, if you look at McKinsey, Bloomberg, other kind of market estimates, we're roughly 4.5 versus the 6.6. So even at our best estimate, and that is increasing all the time. When we started out, we were probably at 2.5 by 2030. Now at 4.5, but the need is at 6.6 in order for us to transition in time. So there's still a gap, and of course we are trying to fill that gap, and also encourage other projects within our industry and others industries to transition.
Thanks, Alex. And I think that the plant you have at the back is the plant where all these the most sustainable green batteries should be produced, right? Or is being produced.
Yes, I thought it would be nice to kind of show the one of our factories is the biggest one. It's where we have invested roughly 2 billion euros in the north of Sweden, which is now up and running. It's the first European large-scale battery manufacturing plant, and it's fully vertically integrated. And yeah, we're up and running and producing cells from here and delivering to our OEMs.
Great, and this brings me, I think, to the next part of our panel on like how can we harness green innovation? Because before that plant was built, I think there were some stages you went through. I think that what Julia also very well described. So I'm very keen to hear your firsthand experience on like how do you bridge financing for green innovation over the life cycle? Like you start, how do you go about? How did it go for you? This journey?
Yeah, and it's been a tough journey in terms of financing, in terms of a lot of different things. But being a startup and the need of that amount of capital, almost a little bit naive in the beginning, but you need to raise billions of dollars in order to get to that level where you need to be. We've been through a couple of different phases. I would like to focus on the kind of the labs kind of R&D scale up to industrialize production, which was for us in 2017-18, where we were raising roughly $100 million. So pretty capital intensive already then for being a startup. But this is, I think, this is a phase where we see in Europe there is a gap and there's a need across sectors. And what we saw is that it was not easy to find natural investors in that phase. So what we did was actually to team up with the industry. We raised equity capital from industrial players like Scania, Siemens, BMW, ABB, Vestas, with a clear incentive, aligned incentive and support and a common kind of goal. So that's how we enable that phase from on the equity side. But there was a natural gap in kind of financial investors coming in that early. And in addition to that, we had great support from the EIB. There was a program called the Energy Demonstration Projects, and we were able to get a loan, a very early loan to build that factory, kind of asset-backed, but also some contract-backed, which really enabled us to kind of scale up that first phase. In addition to certain local grants, and I think Inno Energy was also a key player in this phase, and for this type of European investments. So that's the first phase, and then the second phase we have been through. It's when we have scaled up the factory you see here behind me, how you go to large volume production and the amounts of investments in the billions. So this is kind of 2 billion euro investments, where it was kind of the similar problem or challenge was to find a natural type of equity investor that would be able to kind of come in and find the right pockets of funding. We were not we didn't fit into venture capital. We didn't fit into because it was too capital intensive. We didn't fit into private equity because there was no cash flows. We were not kind of an infrastructure, and we didn't have any balance sheet as a greenfield. So it took some time, but then eventually we found some good partners that were able to kind of come in and work and price that risk. Partners that had a clear view and understanding of the industry. So both Volkswagen being one, and then on the financial side, Goldman Sachs, that had done a lot of work in the industry, in the energy sector, and were able to do due diligence on this and come in early. I think that together with debt, which it's kind of you need equity, you need debt, and they were dependent on each other. So on the debt side, we worked a lot with EIB again, but also other commercial banks and policy-driven institutions that really made a difference. And here we're talking about 5 different other policy-driven institutions. We work with Euler Hermes, BPI France, and the Nordic Investment Bank, Nexi, Kexim. So very structured project finance. It took us 2 years to get there. So it took us a lot of time. It was quite tough, but we eventually got there, and we did it by challenging status quo, and the individuals working on this was kind of doing stuff that's out of the ordinary, out of the ways they've been working before, and really made this possible. And I think that's what I think is important going forward. I do see a risk of other projects not getting there, but and some clear opportunities that we can work on to accelerate this.
Thanks. So what I sense is that you need a lot of endurance as well to get to where you are, I guess, today. If you think of the 2 phases you described, like from R&D to industrialization, and the second one to the large volume, which one was the most difficult? Was there like, or did it have its own challenges? It's hard to compare.
Yeah, I think it had its own challenges. In the early phase, it was more kind of how do you get these industrial partners in, dealing with a purchasing team, a technology team, an M&A team, and convincing them this was a good investment and good for both of us. and really bring them in, working with EIB on type of how do you structure an instrument that is a little bit different from anything else. I would say it was different type of phases, but then I think in terms of endurance and work from a number of different people within other institutions and advisors, I think that big financing is something I will always remember, and we can probably write a few books about how people came together from all types of stakeholders, even the customer side, to kind of get those offtakes in place and enabling this.
That's often the case, right? That you need to have like cooperation and get people together, and then the magic can happen, luckily enough. I think this is also a nice bridge to you, Lara, because as Alex mentioned, the EIB has been involved in Northvolt in this whole trajectory. What do you see as, how was your experience? Do you see challenges to finance green innovation, or what are opportunities or solutions?
Thank you, Irene. Indeed, I think given the size of the gap that we need in innovation, we need partnership, and we need indeed private players, we need the private funding, but we need the private and the public to work together in a way that it's coordinated, because as Alex mentioned, the challenge is that equity and debt need to come at the same time. Debt cannot come in if there is no equity, equity cannot come in if there is no visibility on the debt at the same time. And it all needs to happen quite fast if we are to meet the challenges. And we see that too little capital is being channeled into innovation, and the market on its own is not going to bring up this shift. So the EIB has been developing instruments to address this type of market failures and support investments that are economically viable, but do not receive commercial finance due to perceived risk. And we see a number in the different stages, as Alex was mentioning, and Julia before. We do see the need for basic R&D, but we do see particularly the need to translate R&D into innovation. And this is an area where Europe is very good in R&D, less good in translating this into innovation. There needs to be then both VC investments in the startup and as well as supporting their growth. So as the EIB group, we also have the European Investment Fund, which is the biggest European fund of funds, and they do invest in a number of funds in these spaces supporting the clean tech. But going beyond growing these startups and supporting, particularly when it comes to clean tech, the demonstration and scale up is very capital intensive, and it has high upfront costs and risks. In a way, if we look at the completely different market, pharmaceutical, you also need large investments upfront in order to test, to do the clinical testing. But then your product normally has an unmet market need. It's an unmet medical need. So there are no competing products here. As Julia was mentioning, the green premium. Here we are competing often with products and infrastructure which are already there, so and are much cheaper in a way. Other projects, like the case of Northvolt, both at the demonstration and at the scale-up, are too risky, too large. Too risky and too large. You have the two elements. So the example that Alex brought is one of the answers we have worked on together with the European Commission to support the energy demonstration project. And this is a blended finance with the European Commission, with EU budget is used indeed to partially the risk, the bank loans in these areas to support both loans and quasi-equity. And as the example of Northvolt, we have supported a range of technologies for the demonstration stage, floating wind energy, carbon capture and use in the steel sector, for example, and PV and batteries. also, what we rely on is not only a partnership with the Commission, for example, on other mandators, but also a partnership with the capital markets. So the EIB has been a pioneer and a driver of sustainable use of proceeds bond since we issued our first bond in 2007. And we do see a role and a need from patient investors like insurance, pension funds, for example, to support this type of long-term investments. And this can be facilitated by also supportive public policies.
Thanks so much, Laura. I think indeed what you said, also the long-term investments, right? Because it takes some time to really make it profitable. And also what you said on that to introduce R&D more into the innovation to make this match. Then I want to move up to Laura on to hear your view on what challenges do you see in the different stages of the innovation cycle, and how can public-private partnerships and breakthrough energy help them to address it? What is your experience at this front?
Thank you, Irene. I think that question was for me, right?
Yes.
Okay.
Did I say Laura? I mean Julia. So sorry about this.
Problem. So just I think it's extremely, I mean, the Northvolt case and all of the products that the EIB has developed is quite extraordinary. I think coming back to the technologies that we're sort of globalistically looking at, on how do we get to net zero, I think, we tend to refer to 3 valley of deaths from the entrepreneur's perspective of how do you go from a proven idea to a product and then into an affordable product, because it's one thing to have that product, it's another to make it affordable. And I think there are many more challenges that come for startups. Not only is it difficult for startups, but I think to Alex's point, it's even more difficult when you're looking at climate tech, when you're looking at deep tech, when you're looking at very capital intensive startups, because they require space, they require equipment, they require the right type of permitting and a deep knowledge of the regulatory environment, as well as risk tolerant and patient capital that Laura mentioned. The other thing I'll mention is that not only do we need these technologies to deploy, but we basically don't have that precious commodity, which is time. 2050 is only 28 years away. And if you look back at what it took for solar and what it took for wind, it took them 40 years to get cost competitive. So we really can't afford that. And that's why, examples like what Northvolt managed to develop is extraordinary, because it's really sort of compressing that cycle, even though the hardship that it involves, as Alex mentioned. We really see, 3 types of pitfalls or 3 challenges: the technology deployment gap. Fully agree with Laura on the fact that in Europe we're very good, or at least at being very good at research, and we have quite an amazing Horizon Europe program that supports that, as well as national funding. But when it comes to company building, I think there's still that gap when it comes to venture funding. And venture funding has a critical role in being able to address that company building stage. We've doubled the amount of venture funding that is spent for clean technologies over the last year, in Europe. So we're at 11 billion, and that's already quite a remarkable scale. On the other hand, if you compare that with the US, Europe is only attracting 15% of that venture fund for clean tech compared to the US, which is 50. So there are questions around how do we address that? And Laura mentioned the EIF fund-to-fund programs. I think those types of programs are extremely important. But then I come to the last phase that Alex mentioned, which is really the first commercial scale projects and the challenges that you have there. Let's take sustainable aviation fuels as an example, where today we know that the aviation sector wants to decarbonize. We're seeing a pipeline of innovative technologies and companies, but today they're still held back by the green premium, because it's still much more expensive than today's jet fuel. We're also seeing difficulties relating to securing the feedstock that are needed to produce at scale and to get the prices that we need. And then, of course, we have an aviation sector that just went through the whole COVID crisis, where it's also challenging to get offtake and investments from their side. So I think that my point is that we need, in order to be able to make these first-of-a-kind projects commercial and actually get to final investment decision, we need to think about both concessionary funding, so grants, where we see programs that coexist on grant funding, but also with the rent-seeking capital and the equity side. And we see that both financing structures exist, but today they're not collaborating enough. And it's essentially that last mile flexible type of funding that you need in order to get those projects to see their final investment decision. So just coming to what we've done on the new program, which is called Catalyst, we set that up because indeed we noticed that there was a big challenge when it comes to these first commercial scale projects in sustainable aviation fuels and green hydrogen. Essentially, financial players, private equity banks, commercial banks will come when there is probably 5 to 9 projects that have been funded. But it's that sort of initial gap of how do you go from first of a kind maybe to the fifth of a kind large scale project where that gap is missing. So we developed a blended finance initiative that essentially is inspired by experiences in global health. And what we did here is that we raised capital in the form of grants, in the form of low-cost equity, and also in the form of off-takers. So for those companies and corporates that are willing to pay at a premium and to off-take for the products. What we then did with the European Commission and the EIB is that we essentially use that blended finance where we bring philanthropic and low-cost equity, and we blended that and we mixed that together with the European Commission and the European Investment Bank, which are also then matching on their side grant funding from Horizon Europe, as well as the quasi-equity and the loan guarantees that are provided by the EIB. So essentially what we're doing together is we're being sort of smart in combining the type of capital that these projects need in the form of grants, in the form of low-cost equity, loan guarantees, and offtake agreements. I'd be curious to sort of hear also from Alex if that would have been a helpful type of financial mix as he went through these different phases.
Alex, do you want to respond to?
No, definitely.
Yes.
I think is one. I mean, it's exactly what we were looking for, and what would have helped a lot, especially in the first phase, I think. And then there's another topic around kind of how can you scale it up into the hundreds of millions of euros in the second phase. But in that first phase, definitely something that we have identified that would be very good for us and for other projects out there. So yes, indeed, it's one of the topics I had here prepared for the next question.
But yeah, just maybe one question for all three of you now, but that comes to my mind when listening to you, because if I look back at the IPCC report that was published earlier this year, there is a big finance gap identified, but yet they also identified that it's not the lack of money, right? That the funding is there. But how do you see that? Is it because we cannot connect them? How do you de-risk? Anybody who wants to step in on this? Julian?
Well, maybe I can start, but then the EIB certainly, Laura certainly has much more experience than I. I tend to agree. I mean, not being a financier myself, I think what we're seeing is that it's not the lack of money, it's the lack of type of money. Again, I come back to this concessional finance combined with what you would call rent-seeking capital. That is the biggest challenge, and being able to have financial products and this combination of public-private partnerships where you're able to jointly essentially craft a type of instrument that can address all of the financing needs. I think the other thing I would come back to is this importance that Alex mentioned on finding off-takers, those who will buy your products, and being able to find initiatives and kickstart sort of ways to get off-takers and strategic investors at the table. And we're starting to see that in the Fit for 55 with a proposal of having carbon contracts for differences to sort of take over that green premium. But we're also seeing that in the private sector space. We've been an implementing partner of something called the First Movers Coalition, which was set up by the State Department as well as by the World Economic Forum, where essentially you have a number of private sector players like Volvo, like Heidelberg Cement, like others, who are actually making pledges to purchase volumes of their future products around steel, around aviation fuels, for those products that are really truly made from breakthroughs and that come at a premium. So my sense is, if, for example, if we want to be able to scale green hydrogen in Europe, we're going to need to massively invest. We're today at a few hundred megawatts. We're looking now for energy security purposes at tens of gigawatts. And here we're going to need a combination of de-risking financing, offtake contracts, but also, of course, the importance of regulation. So to me, it's this whole combination of having private sector actors working alongside governments, and governments also playing that role beyond the financing, but also on the regulatory side.
Yeah, maybe I can continue there. I mean, I think it's, and we follow this closely, the IPCC report and the IEA reports and everything is coming out. One reflection I have is I think it's we're doing a lot, but we need to do so much more, and it's not happening really. We're trying to we're doing this today. We're trying to accelerate things, but to enable that and to really understand the risk of not doing anything and not doing enough, I think does not come through. I mean, you would think that saving humanity is enough, and we need to accelerate now. But I would like to see also something that would also measure the cost and the risk of not doing anything now, because the risk is so huge economically. It's much bigger not doing these things right now than to take more risk here and now and to even fail on certain projects. And this is kind of where I don't really see the some of the right decisions being made, where and a gap in kind of how we take decisions.
Thanks a lot for bringing this up, Alex, because I couldn't agree more, because we have to be more aware of the risk we are facing. And this is, I'm sidestepping a little bit my moderator role here, because I just want to emphasize that this is also the message the ECB has been bringing out. We did an economy-wide stress test. We published the result last September. There we really state, although we need investment now, on the long run, this will be much cheaper if we invest now than we wait till what is going to happen. And we rather have a gradual transition than to have a disorderly and too late transition, because I think it's just so important that we realize the actions we can take now to move forward on this. So thanks for bringing this up a lot. Thanks a lot for this. I'm stepping back into my role, and then I want to maybe ask, okay, do you see a role for the public sector support, right? Because we've talked about it. I think one of the points I think you just mentioned, Alex, is be more aware and look ahead, I think, on the risks that are arising, and translate that, if I quote you correctly, into plans we have to take now. Is that the role you see, Alex, for the public sector?
Yeah, and I think I can come up with many different things. I think we should continue to do what we're doing well. I think there are a lot of things we're doing well, and base it from the framework we have in place, and continue to work with this alignment with industry and policymakers and private sector. I think this kind of understanding real risk taking, and that's around kind of accelerating now, being able to take more risk today, and de-risking for the future, and both in terms of getting to net zero, but also from a European perspective, and making sure we're building these industries in Europe, we are preserving the jobs in Europe, and we're scaling up European projects. Short term, here and now, I can probably provide you with a list of 50 things. I think we should focus on short term here and now and get things going. There's a lot about kind of just giving mandates to these policy-driven institutions that are wider, enable them, incentivizing us to take more risk and take, we talked about the market risk, take that as an example. Sometimes we see that, the institutions that want to build this market in Europe are actually the ones that are preventing it from happening because there are so much requirements on financing, and you're kind of shooting yourself in the foot because you want to build this industry, but you don't have a clear, say, offtake because it's not normal. So then you're not able to provide financing, and you're kind of, not enabling the transition. And so I think, taking a step forward, enabling more risk-taking and working on the flexibility around this and taking the right risk, I think is one thing. I think allowing for more capital in the capital structure. We talked about equity and debt. There's a lot of capital. Equity is very expensive. Debt, senior debt can be, pretty cheap. But there between, there's also, I think, a game to play in terms of second lien, mezzanine financing, where there's a big opportunity to provide and enable financing. And then thirdly, from a policy-driven institution where we see a lot of value is when you take that step forward and you take a leading position. You enable the teams, you take a lead in the process, you can communicate externally, which adds a lot of value for other investors and other stakeholders, suppliers, customers, and so on. So that's here and now. And then there are other long-term things that we can continue to build on, freeing up competition rules, enabling more grant financing, other type of equity financing, working on green instruments that we're actually kind of enabling projects and are incentivized to do, that would give you better pricing or better flexibility, and different ways of backing those instruments. But I'm very much focused here and now. And then, of course, there are also a lot of other things that would take more time, I think.
Thanks. That's a nice Christmas wish list almost, right? For the policy makers, but a very good one, Alex. Julia, do you want to add something on the role that governments can play in addressing the finance gaps that are holding back clean energy innovation?
Thanks, Irene. First, I fully agree with sort of the Christmas wish list, right? That Alex mentioned, just to quote your words. I mean, I think that governments certainly have the role of an enabler, be that of funding or incentivizing R&D, setting the rules, the regulations, the policy incentives, and even helping de-risk some of these projects. Focusing on a study that we did, we worked with Material Economics on a study that looked at what are the game changers in the steel, cement, and chemical sector. And we looked at 5 technologies that have the capacity to reduce the sector's emissions by 70%, right? So we're looking at carbon capture and storage. We're looking at many other technologies, hydrogen-based steel and others. And we essentially sort of mapped out Europe, and we're finding that there are over 70 projects that are ready, if you will, to launch at scale, but none of them have reached final investment decisions. So we went into sort of looking at this, well, what are the gaps, right? And we come back to the price premiums, especially for the first of a kind, but then until that technology is deployed and you make improvements. But the study sort of shows that it's not just a financing question. There really needs to be a whole of government, essentially like an industrial strategy type of approach to this. And we need essentially a strategy that is targeted to the key barriers. And I point to 3 of some of the levers, right? The first that Alex mentioned is around improving the capital structure for these large CapEx projects to overcome some of the equity type risks. The second is the role that the governments can play to help improve the risk return profile of some of these projects by helping stabilize some of the revenues and orchestrating demand, be that on public procurement or private sector procurement. And then the third, to me, is sort of the role the governments can play in addressing the wider systemic risks, being making sure that there's no regulatory uncertainty, that the permitting is happening fast, and also that there's the availability of key inputs like clean power, electrolyzers, or critical minerals. Point being, again, I think to me it calls for, in this phase of acceleration, making sure that there's investments happening in this decade, because otherwise we won't be on track to getting to net zero by 2050. And this call for an industrial policy that really looks at all of the levers, finance, of course, but not just finance, and really thinking about everything that creates sort of that need for an investment certainty to happen and those investment decisions to happen.
Thanks, Julia, for setting this out so clearly and adding to our Christmas list. Still early, but I think we have to get ready. Laura, do you want to add something also on like how do you see the public-private cooperation at this front?
Well, I have an easy task here because I can really build on this Christmas list. But in fact, you know, what both Alex and Julia said, I think it's very important. And in this context of we need to accelerate, we need to do more, particularly what Alex was saying as a customer of the bank. So someone has seen the role, for example, public institutions as and policy-driven banks as us can do, but we can do more. And exactly the points he was addressing, this is really something we need to build in order to be able to be relevant, to accelerate, to take this energy crisis, as Laura was saying, as a trigger for innovation. And one of the points where the bank does add value is we also bring some knowledge to the table. I mean, we do have a big group of experts inside. So when we talk about batteries, we understand batteries, and other banks do not have this. So that's why we can also play, in a way, also a convening role. And in our experience, when financing highly innovative green projects, we see a number of investment barriers that where the public can play a role. As it was mentioned, the development barriers for example, renewable energies, but also for raw materials, the ones needed for the batteries. It takes a very, very long time to get the permits to be able to develop these fields. The second area is the regulatory uncertainty on product design and standards, or there are product designs, but these are different across countries in Europe. So the market is really limited. One point that was not mentioned today, but I think it's important, is the lack of skills. So the right skills, of course, and we do need public investment in vocational training, in reskilling, in upskilling, and providing the workforce with the right skills. And as Julia was mentioning, not only we need the public sector, not only to provide, to remove the barriers, but also to provide the right incentives. And here, you know, the incentives in terms of the pricing of carbons, the carbon for difference type of incentives, and also investments in the infrastructure. Hydrogen was mentioned, but I mean, it's also penalized by the lack of infrastructure, no? And this is something where we do need public investment. As for batteries, we do public investments also in electric infrastructure. And the last point I wanted to mention is that public support and regulation can also help mobilizing the flow of private money for the green transition through the support of well-functioning capital markets. So the sustainable finance framework is key in this, and of course the EU taxonomy is part of it because it gives us a common language for understanding what is green, as well as the regulation on financial transparency.
Thank you so much, Laura. And I think I mentioned it as a Christmas list, but I think maybe it's more a to-do list, right? Or things, or an action plan on things we should be working on going forward. So it's been really a great pleasure of discussing this with you. We have a few minutes left. I don't know if there's any question from the attendees who are inside. I'm just in case they're not. I think we're closing the time anyway. So if I don't hear anything or see anything, then I'll just go to the closing round. And this is because I think we covered so much ground today, and we all feel the urgency. We all see the need that we need endurance how to tackle this green premium question with all the competing with this existing energy of the carbon that is still cheaper in many cases. To all three of you, if you could think of, like, people have been listening to you over the past almost hour, what do you want them to take away? Can you describe one thing? If they leave this room, if they leave this session, what do they have to have in their mind? Because our wish list is long. What would you prioritize on the whole action list here? And Alex, can I start with you, please?
Yeah, sure. And I have a 50-item wish list, but I will try to summarize it into one. It would be around kind of how can we make sure we align real risk taking and really kind of enable these stakeholders, and especially some of these policy-driven institutions, to support even more here and now. I mean, right now, you know, some of the easy things we can do. That's what I would like to kind of take with from this session, and I think we have identified a few and are fully aligned, and it should not be that hard to work on this actually. So that would be my wish here and now, actionable items and around real risk taking today versus the risk we're facing in the future.
Thanks. That's a beautiful one. Julia, what's yours? What's on your mind?
I'd start just with the current context and geopolitical situation in which we're in, and the urgency of addressing the energy security challenges alongside the climate challenges that we have. I think Lara pointed in her remarks on the role or the trigger, if you will, that the 1970 oil crisis played on driving investments. I would add to that, sort of European governments poured a lot of money in R&D to develop what then became renewable power generation. And so I think, to me, in my mind, is how do you use the current situation as really an accelerator to drive all of the to-do list, which, again, I agree with you, it's not a Christmas list, it is a to-do list to accelerate the deployment of technologies that we know and the solutions that we know are needed. But how do we sort of have that whole of approach on financing, on offtake, on regulatory to really drive that to happen? I'll just add one thing that I think we didn't so much mention here, but is the importance of bringing those technologies and developing in the context of emerging economies, because ultimately that's where also a major challenge lies. And how do we sort of use the deployment that we're doing in Europe to bring down the premiums in Europe and in other countries in order to make those solutions affordable to those countries as well.
Thanks so much, Julia, and also for indeed mentioning the emerging markets. I think it was mentioned alongside, but it's good to emphasize it at the end, because I think it's a global challenge we're facing, and we should move on this globally, and maybe Europe or other parts in the world can accelerate on things and spread the knowledge worldwide, but it's something we really need to focus on. Laura, for you, the last one on the list.
No, thank you very much. No, indeed, I just wanted to pick up on this point. It's a global challenge. We need global partnership. Julia mentioned partnership before as well. These are key. And you know, it really mirrors what happened with COVID. We needed to develop more than one vaccine, more than one solution. And here we have the same, not only one technology, more than technology. And we needed to do that faster. So all the actors needed to come together. And I agree, you know, this crisis need to be the trigger for this sense of urgency, so that we somehow consider that, you know, and not doing things now comes to a cost later and very soon. No.
Thanks. I think all three of you, it's great because it builds so nicely, right? Aligning real risk taking, the urgency of the energy security, and how can we leverage on this situation we are currently in now, and also how do we partner on a global scale to move forward. So this is, I think, a wonderful conclusion of our hour together. And I just want to thank you again for joining us in this panel, taking the time, sharing your insights. And I think we all feel the urgency, and I think you all gave me energy again to move forward and for more endurance. So thanks so much, all three of you, for joining us today.
Thank you very much.
Thank you very much, Irene.
Thank you for inviting us.
Absolutely.
Thank you. And now, please stay. We're having a short break, and then we have a beautiful final panel lined up with the governor of the Central Bank of Brazil, of the Central Bank of China, the European Central Bank, the general manager of the BIS, and this whole panel will be moderated by the governor of the Central Bank of Banque de France. And then you will hear what is next for central banks. And I think this is a great finish of the two-day conference. So I'm looking forward to listening to that. And I hope you enjoyed the 2 day session so far. All the best.